Hello all, my name is Brian Woolard and I'm with RetireReady Solutions. We are the makers of TRAK, the Retirement Analysis Kit. And I'm glad to welcome you to another Feature of the Month video. In this video, I'm excited to be highlighting for you a feature that's been a part of TRAK Align for a while now, and that is our average tax rate. Have you ever had a client ask you, how will taxes impact my retirement? Or, with most of my savings in a pre-tax account, will I have enough in retirement after taxes? Or maybe even, how much should I be saving today in a pre-tax or after-tax account to reach my retirement goals? If you've had these questions or similar ones from your clients, today's feature is for you. The average tax rate method is found only in the Deluxe version of our gap analysis tool in TRAK Online. Let me show you how it works. Here we are in TRAK Online and in the Gap Analysis Deluxe tool. My active client is Amy Sample. To give you some background on Amy, she is 47 years old, wants to retire at age 65. She averages around $2,500 a paycheck, paid 26 times a year. She's going to be receiving some Social Security, and I have her life expectancy set to IRS tables. Moving over to her retirement plan tab, Amy's part of a 401k, and she's got roughly $210,000 currently. The match is 100% of what she puts in to a maximum of 6%, and she's currently putting in 6%. Moving over to the Accounts tab, Amy's got a few outside assets. She's got a Roth with $95,000 as a current balance, and she's currently contributing around $100 a month. She also has an old 403b that's got around $43,000 in it, and she's currently not contributing in anything. She's just letting it grow by the rate of return. Moving over to the Calculations tab, and to see our integrated benefit analysis, let's click on the Retirement Years Calculations page. Here you can see with all her different funds, like Social Security, the 401k, 403b, and so forth, if she retires at 65, she's fully funded. But she's in a tax-neutral illustration here, and she has quite a bit of her retirement investments in pre-tax accounts. We can drill down and look at the numbers more closely by going to the grid view. Here we see the average monthly need, and again how accounts are distributing toward that. But again, this is all gross. And she's got quite a bit of money in a pre-tax 401k and on a 403b. So what will retirement look like after taxes? To see the hypothetical impact of taxes on this retirement scenario, let's go back to the Setup tab. Here's where you can select your taxation model. Clicking on the drop-down, I can switch from tax neutral distribution to average tax. Here's the average tax rate feature I've been talking about. Selecting average tax, you can now enter in the percent you assume your client's going to be taxed at in retirement. I can leave it at 20% or maybe bump it up to 22%. With the average tax rate set, I now need to configure a few things about Amy's accounts. Let's go to Amy's Client tab, selecting the Personal tab. Scrolling down, you can now see under Social Security, it's being taxed at the standard or default of 85%. You can adjust this if you would like. I'm going to leave it at 85%. The retirement plan will automatically be taxed depending on what type of account it is. Going to the Accounts tab though, we need to do some configuration when it comes to each one of these accounts. With the Roth selected, you can now see scrolling down under Information, it says Tax Method. And you can choose between tax-free, above cost basis and deposits, or fully taxable. This Roth IRA is tax-free. Now clicking on the old 403b, I want to switch it to, as it already is, fully taxable. Now with the tax method configured on my accounts, let's go look at the retirement scenario. Going back to Calculations, clicking on Retirement Years, let's go back to the chart to start off with. And you can see now Amy, after tax, has a shortfall. Her retirement investments are running out around age 84. And going back to the grid view, we can now see that the need is after tax. And when it comes to the distribution of accounts, we can switch between after tax and pre-tax. let's go to after tax. So now under the distribution from the 401k, we can see the after tax distribution, and the same for the old 403b. And then over to the right, you can now see a new column called taxes paid. You can switch back to pre-tax to see the actual distribution before taxes, and then back to after tax. Going back to the chart, you can then use the scenario editor to adjust the average tax rate, like if the rate is higher or lower. You can even have conversations with them of leveraging their distribution from pre-tax accounts by going to the Accounts tab. With the Roth selected, you can scroll down to distribution method, switch it from use funds as needed to maybe dollar value with inflation. I've already entered a dollar value of $1,500 a month. They can then see how their money might last longer, depending on how they leverage the pre-tax and after-tax counts in distribution. You can also go back to the calculations page and select general values. And here you see a thermometer view of their need. And down below, under shortfall solutions, you can see contribution suggestions to either a pre-tax account or an after-tax account. All this made possible with the taxation model of average tax rate, showing your client the impact of taxes on their retirement scenario and being able to educate them on the best scenario to reach their retirement goals. Thank you for watching this Feature of the Month video on the average tax rate. If you have suggestions on other features you'd like us to highlight in either TRAK or TRAK Online, email us at support@retireready.com. Or if you'd like to upgrade to our Gap Analysis Deluxe tool and get this feature and more, give us a call at 503-831-1111. Thanks again for watching and have a great day.